Okay, so market yesterday got hammered below 282. What we talked about in the morning meeting was the 280.50 area. It was a pretty good risk reward, um, just based on the size of the down move. Also took us to about 2% below the high here. So that's been pretty standard. I put as far as kind of bounces from down moves when it was relatively easy. It wasn't perfect. It overshot a little bit initially, but once it got back above, it never held below again and gave you an opportunity right before the close to buy, um, and then a chance if you wanted to not swing to sell into 282 into the close. So this morning's gap up, we're firmly inside of this range again, and it'll be interesting. I guess we could break to the downside again below 82. Question is, would we do a retest here, or would we go higher or low and then do that? And of course, we might not even get below 282. We may just break to the upside and retest here. It's kind of cool that the SPYs are staying in such a nice tight range. Remember, we spent a few days up here really tight against 286. We're about a half a point away from the market making a new high and Trump tweeting again about the market, which he hasn't done since January when we put in the all-time high. So the market gods don't want to hear Trump, and so we failed there. But there's nothing. I keep on getting questions from friends and people. Can we have a bigger down move? There's nothing, like market tech stocks during earnings, they get hammered. It didn't impact the market, the SPYs. The trade stuff doesn't really seem to be doing anything on the downside anymore. When good stuff comes out, we're seeing upside. I think the most recent weakness kind of on the SPYs was the whole Turkey was going to be the new, for those of you who weren't around in 97, there was an Asian financial crisis, which started, I believe, in Thailand, which was really small, kind of like the financial crisis where these low-tier mortgages spread, and people are like, oh, Turkey is going to spread, contagion, and it's not really the same thing as what happened in Asia. But regardless, I think that's what kind of created this here. Just like put this in perspective. Kind of here's what we've done since the bottom in May. We've gone back up above 280, popped up, came back down, and we're kind of hanging out here in the low 280s, consolidating. And perhaps we won't make that move, the bigger move, until after Labor Day. So that is that. On the IWM side, which I haven't been paying as much attention to recently, it just hasn't been as clean with levels. I mean, if you look at it, in the spot you would think you would look for a bounce would be right here. And it even way overshot 80, overshot this. Just don't think it's been particularly clean for the reasons that I mentioned last week when I talked about it. There's just not nearly as much liquidity when bigger players want to get in or out, and so it's just creating. SPYs have been much better. And then my problem with the Qs, people ask me about the Qs a lot, or they tweet about them. My issue with the Qs is they represent like 4 or 5 stocks, basically. They represent Facebook, Microsoft, Google, and Amazon. And it's like you can just follow those 3 or 4 stocks and see how they're trading and trade off of those stocks rather than the Qs. For the most part. So every once in a while, it's good to jump into the Q. But like Facebook, one I didn't buy yesterday, but it came back down to a really good buy price, this 176. Overshot it by a little bit, but 176 was a good price. I mean, it bounced. We got above 176. The next day we gapped up. We did a retest, and then it was off to the races. So, buying for 176, see if we could trade back up to 179, 180. That's a good trade. And if you held some and it actually gets back above 182 here over the next couple of days, you maybe walk into a retest of the recent high. All right, so we got a few things to look at. Walmart is really a case. The guidance was good, but this is more of a reaction. It's kind of the opposite of Macy's. So Macy's actually had pretty decent guidance as well, but Macy's was kind of, if we take away this from the gap below 100 a couple of quarters ago on Walmart. Macy's was kind of this chart right here, like it had gapped up and then it was near the highs, and then the numbers came out and people who bought it in front of earnings. It's actually exactly what happened a couple of quarters ago, right? This had been really strong into earnings. It had run up to 104. They didn't like the number. It gapped down. It got hammered for 2 days, tried to do a little bounce, and they just kept on killing it. It actually looked like it was a really good short. So you have a situation where this was bad news here, and then people were caught long, and then they kind of crushed it, and there was more downside follow through all the way. I guess it filled this gap here. And so now a lot of people are short it, they're not long it, and they came back and they raised guidance. So they're basically gapping it above this gap down from February. Now, if all these people weren't shorted and everyone wasn't so bearish on it, I'm not sure necessarily them raising guidance. What was it, a couple percent? They raised it 4%, which is solid, I guess. But it's up over 10% right now. And so this was an expectations game. Is it enough? Is it enough for it to go above 100? I don't know about that. So, and it's acting like they're going to try to break it out from 100 right now. So I could go either way on this one. The argument for that it will break out above 100 is a lot of hedge funds are shorted. People are underinvested. They're like, holy shit, things aren't that bad here. This is good. This thing is going back right back up to 104, 105, where it was a couple of quarters ago. Remember, part of this was this theory. Like the reason why it gapped up here and went higher was they were going to crush it on online sales, and that never really materialized. But now apparently they're doing, I guess, good in the groceries. So I really could go either way on this one. I could see it spiking up, putting in a high right on the open, and trading down to like 97, 98. Here, what I put on for support, 97.5, 98.5. I think like 102, 102.50, like this. I put 102 on the sheet. This is a good working range to start. This whole range here encompasses about 4 ATRs. It's possible may only trade in like a 2 to 3 ATR range. This bad print here is giving me trouble zooming in on the chart. So it hasn't been below 98.50. I guess if first move is up and it fails, like not that much above 100 and gets back down below 100, I'd look for the move on the retest to 99 to 98.50. And then if it shows weakness below 98.50, I would look for a play all the way down to 90 to here. But I wouldn't be willing to bet that it sells off further than here. And as I said, 102 on the upside. I'm skeptical that it can go much higher than that. Cisco, CSCO. So Cisco is actually similar in the sense that I think the expectations were low on this one as well. What did they raise their guys? I just put solid. I think it was a slight raise. So if we look at it from a bigger picture perspective, it had a huge uptrend in 2017. It's just been digesting that move. So it topped out at the beginning of the year. Okay, so this is just the market sell-off right here. Yeah, so it's just really been consolidating, let's call it. Looks like the average price is around 43.25 or something for this year, right around here. Now it's gapping, the bid's above 46 right now. I put 45 on the sheet, I put 45.50. So we double topped already. This is after hours. It topped out at 47.90, topped out there again. It's not looking great right now. 46.25 is where they bought it before the final up move. The second leg started from 45.15 or so. So I guess the breakout of the second up leg was here. That's why I put that as support. At the bottom of that, be like a safer buy. So normally it's 2 ATRs. So this is from here to here is about 2 ATRs. This is our working range. As long as it though is kind of being bought here just above 46, you can look for it to kind of do a retest of the pre-market high. But I'm sure some people are already shorted from here, looking for it to flush down at 45.5, 45. And finally, JD. So JD, I don't know what they said on the conference call to cause this move from 31.5 to 33.5, but the sellers are in control again. The numbers were bad. I thought about shorting it here, but then I was like, yeah, it's kind of beaten down. And at that point, I didn't actually know the numbers weren't good. So even if I knew that, I probably would have been cautious. So it had this big move in 2016, put in a new high at the beginning of the year, about 48. But I think the main fear is that they're not doing as well as their rivals. They kind of broke the uptrend here, spiked that one day to 45, but got right back down below it. And the sellers have been in control ever since. So what makes it a little bit complicated is just like some of those Chinese names were really good buys yesterday, and they all worked on the long side. And so you have that force, basically people saying, oh, it's sold off, it should bounce back up to 35 or something. But then the flip side is the numbers are actually not good. I want to buy stocks where the numbers are good and it's beaten down, as opposed to it's beaten down and the numbers aren't that good. The beaten down, while numbers are good, those have a high probability of working. It's usually because the stock has just run up too much. So anyway, sellers in control. If it gets bought here at 31.50, maybe you play for a move back up to 32.5. This area right here where it topped out yesterday. Be careful. Any type of pop from this area here where it's consolidating after the open, let's say above 32.20, and they're just supporting and buying and buying and buying it, and you want to look for a move up to the pre-market high, that would be fine. All right, so yesterday. So yesterday was Macy's getting crushed below the pre-market support. Sorry, not the pre-market support, the recent support below 38. So the numbers were fine and the guidance was fine. I suppose that's why it was initially up at 42. It was up over 60% this year, and they bought it. Everyone bought it the week going into earnings. And so once it started to sell, you had kind of the cascading panic. Everybody who was long it basically for the last couple of weeks was out of the money once it got below 38. Now, they were buying it there for about 15, 20 minutes. So I bought it there. But then they flushed it down to the next, well, not quite to here. This support, 36. They had a decent little bounce to 37.20 before they hammered it. So this really is a question. I did that video if you watched it. The way it closed, it looked like to me it could flush below 35 today. But certainly over the coming week, some sort of bounce from this area right here. This was last quarter's earnings. Got above 32.50. It failed at 35.5, and the next time it got above 35.5, it retested this area here, and it was just off to the races to $40. So just looking at it, you have a lot of people long here, a lot of people selling yesterday. I don't know if they're done selling yet, but the selling should end up finishing somewhere in this area here, unless enough people just decide today that was stupid. The move was stupid yesterday, and what it'll do is it'll just go straight up to here above 36, and it'll kind of do this and consolidate above, and then maybe the move will finish right here where it started from yesterday morning. So I'm open to both possibilities. I'm leaning more towards it'll flush down into the mid 34s before it bounces. But either way, happy to play it. Our firm, of course, is net shorted, which complicates the situation a little bit. But $1 below the current level, I won't even care that we're net shorted. So that's that. CGC. CGC, I thought was going to bounce at some point yesterday. There were two places that I thought it could bounce from. One was around 30 and one was here. So I was actually pretty pumped when it, like in the morning, popped below $30 for a few seconds. And so I would say the most conservative and easier trade was after I stopped watching it in the late morning when it started to hold above 30 here. And then the play is just back up to this failure area in the morning. It didn't quite get there. It was above, well, it's right there right now. But certainly if you were long from here and you took sales into 31.5, 32 to cover your risk, this was good. Then you kind of have an option. You know, this could have gone back up to 34, 35. So we'll see today. Like, if it drops down into here, I'll buy it here. Into here. We'll kind of see. So that's that. Baba. So Baba actually is like the one Chinese name I didn't buy yesterday, and it went. And it was the one I had in the sheet, and I had the 166 support. So that was kind of stupid. I did get an alert there. I was already in a bunch of other things, and I didn't have a script that automatically bought it, and so I didn't manually buy it. But it did flush below 66, which was our first support. It ran up to 68, and once it did that, if you wanted to bid into 66, that's obviously the conservative play to do. And at the end of the day, it traded back up to 170. So Baba does retest a lot, so there's a reasonably good chance you'll get a chance to buy it here again against yesterday's low. You may not, though. It may just go back up to kind of where it broke down from a couple of days ago. Well, when we bought it here this morning. So it's already above where we bought it 2 mornings ago by about $1. And it's this 173 where it failed on that day 3 times. If it's consolidating above 173 this morning, there's a reasonably good chance that people will just bid it all the way back up to 175. And staying in this channel. Don't have enough time to go over Overstock. It's a very difficult stock to trade. I thought the other day when it gapped up to 48, it was probably a good short. And I haven't really watched it since. It just was a weak stock coming into that gap up, and obviously it got crushed. So MU, which is a stock that I like a lot, is not that hard to trade. So back in May, it bounced from the mid-40s all the way up to 60. It's just a battleground stock. I actually don't have time to really talk about why that is, but it had gone up here in earnings to 60, came back down to the mid-40s. It based for a few days, and when it finally got above 47.5, it just had a tremendous move very quickly. And so that's why yesterday I bought it at 47.5. So I don't even care if it goes lower. I just think the risk reward for a move back up to the low 50s is really good. So if I can get long it in this area here and hold it for a couple of months for a move back up to the high 50s for the next earnings report when they report another good number, that's the play. But in the meantime, it's short-term oversold. And so right now I'm long it from like below 50, 47.5. And I'm just, any type of like pullback into here I'm going to buy. And then I'll sell some into like 49.5 that I buy here and hold what I bought from yesterday.